Hello, my name is Ricardo Ramos, and today I will be discussing Fannie Mae's Desktop Underwriter Validation Service, a new procedure and technology which is used to minimize certain risks associated with originating of mortgage loans. Before I go into how the service works, I will first discuss how mortgage loans are originated and sold on the secondary market. First, mortgage loans are generally originated by lenders with the intention to sell on the secondary market. Most lenders do not portfolio or in turn earn the interest on mortgage loans they originate. They generally sell it to an investor or GSE, which is a government-sponsored entity whose sole purpose is to purchase mortgage loans on the secondary market. The mortgage lender or broker seeks out the homeowner or home buyer and qualifies them through the underwriting process. In qualifying the borrower and the collateral or the home that the mortgage loan will be secured against, they ensure that the mortgage meets investor requirements to sell on the secondary market. In doing this process, they earn a fee income. Fannie Mae, or the Federal National Mortgage Association, is a financial service corporation created by the United States government in 1938 as a part of the New Deal. Fannie Mae's core competency is to provide liquidity and stability support services for the mortgage market in the United States. It purchases mortgage loans and securitizes them into mortgage-backed securities, which it then in turn sells to mortgage investors. Fannie Mae allows lenders to underwrite the loans delegated, which means they underwrite the mortgage from beginning to end, and they can also service the mortgage loan on behalf of Fannie Mae, so they can collect the payments and service the loan in that regard on behalf of Fannie Mae. Fannie Mae has certain criteria when purchasing mortgage loans. Some criteria could include loan-to-value limitations, or how much the loan is in reference to the value of the collateral of the home in a percentage. They can also limit the maximum debt-to-income ratio the borrower can have, or what is the borrower's recurring monthly debt in relation to their monthly income as a percentage. They also may have credit score requirements and income, length, and stability requirements which they require on their mortgage loans. Fannie Mae also may have loan limits which can reach from state to state or based on a geographic location. In underwriting and originating the loan, the lender, in essence, is guaranteeing that they have verified that the mortgage loan meets all of the secondary market requirements for sale to Fannie Mae. Now, in underwriting these loans, the lender does face certain risks, and also Fannie Mae faces similar risks through the process. Some of these risks include credit risk. Credit risk is the risk that refers to the idea that a borrower may not repay a loan and that the lender may lose the principal of the loan or interest associated with it. Credit risk could arise because borrowers expect to use future cash flows to pay current debts. The second risk they may encounter is agency risk. Generally, loans are originated by mortgage loan officers who are being compensated a certain amount of basis points of the loan amount that they'd only get if the loan is closed. So what may arise is you may have an unethical or unscrupulous loan officer who may misrepresent a borrower in order to get a mortgage loan closed. There's also mortgage fraud. In this case, it may be the borrower intentionally falsifying information on a mortgage loan application with the intention of receiving a larger loan that they may have qualified for if they had made the application honestly. Now, the process that Fannie Mae has come up with to help mitigate some of these risks is the Desktop Underwriter Validation Service. And basically the way it works is the validation service is designed to provide lenders enhanced loan origination controls that process efficiency and certainty around the borrower's income, assets, and employment. The way it works is the borrower makes application and consents to pull the data electronically, which may include a credit report, and submit it through the underwriting system. The desktop underwriting system will in turn review the information and also verify the information directly at the source. They verify income using Equifax's verification of employment service, and they also verify assets using Account Check's verification of deposit service. So in essence, when the loan is processed through the desktop underwriter, it not only verifies the credit, income, and asset information, it puts them all together and ensures that they meet Fannie Mae's requirements for a mortgage loan. So then after that, the mortgage loan originator is able to close on the mortgage loan and deliver the loan to Fannie Mae with the certainty that it meets their requirements. Now, some of the major benefits of this validation service is it provides assurance to not only the lender that they're selling a loan that meets the requirements, but to the buyer, which is Fannie Mae in this case, that the loan meets their established requirements as well. It also relieves the lender of warranting the loan data, and it also provides some investor confidence in buying the mortgage-backed securities, as they know that they have been processed, underwritten, and verified that the information is all accurate and that the loans are what they are represented to be. Now, this reduces a lot of risk across the board and could potentially avoid mortgage lenders in having similar outcomes to what happened in the housing crisis, and also, issues that may stem from the borrower's inherent issues. Thank you for listening to my presentation.